In this video, we'll be discussing proprietary trading firms, commonly known as prop firms, and whether or not they're worth your time and investment. We'll dive into what prop firms are, how they work, and what benefits they can offer traders. We'll also discuss the potential drawbacks of trading with a prop firm and whether or not it's the right choice for you. By the end of this video, you'll have a better understanding of what prop firms are, how they operate, and whether or not they're worth considering as a trading option. Don't forget to like the video and subscribe to the channel in order to not miss future videos. Also see the description box below for ideas on how to make money online. So let's turn to our video on proprietary trading firms, also known as prop firms. If you're a trader or aspiring trader, you've likely heard of these firms and may be wondering if they're worth your time and investment. In this video, we'll be diving deep into prop firms and exploring whether or not they're the right choice for you. So let's get started. Proprietary trading firms, or prop firms for short, are companies that provide traders with the opportunity to trade with the firm's capital. These firms are often seen as a middle ground between trading as an individual and trading for a large financial institution. While prop firms vary in their specific requirements and trading strategies, most offer traders a number of benefits, including access to capital, training, and support. One of the main advantages of trading with a prop firm is access to capital. Prop firms provide traders with the ability to trade with the firm's money, which can be a significant advantage for traders who may not have access to large amounts of capital on their own. This can allow traders to take larger positions and potentially earn higher profits than they would be able to as an individual trader. In addition to access to capital, many prop firms offer training and support to their traders. This can include access to educational resources, mentoring from experienced traders, and ongoing support to help traders improve their skills and strategies. For new traders, this can be particularly valuable, as it can help them learn the ins and outs of trading and build their confidence as a trader. However, trading with a prop firm is not without its drawbacks. One potential downside is that many prop firms require traders to pay for the privilege of trading with the firm's capital. This can come in the form of fees, profit-sharing agreements, or other costs. Additionally, prop firms often have strict requirements for traders, including minimum performance standards and restrictions on the types of trades that can be made. Ultimately, whether or not trading with a prop firm is worth it depends on your individual circumstances and goals as a trader. For some traders, the benefits of access to capital and training may outweigh the cost and requirements of trading with a prop firm. For others, trading as an individual or with a traditional financial institution may be a better fit. That concludes our video on proprietary trading firms. We hope that you found this information helpful in deciding whether or not trading with a prop firm is the right choice for you. As always, it's important to do your own research and consider your individual circumstances before making any investment decisions. Thanks for watching, and we'll see you in the next video.